Welcome to our comprehensive guide on building wealth from the ground up. In this video, we'll explore the fundamental steps and strategies that can set you on the path to financial success. Whether you're starting with little or have minimal financial experience, these actionable tips will empower you to take control of your financial future and build a solid foundation for lasting wealth. Building wealth from scratch requires a strategic approach and consistent effort. Here are some helpful steps you can consider. Establish clear financial goals. Define specific and achievable financial goals. These can include saving a certain amount, paying off debts, or investing in particular assets. Create a realistic budget. Develop a comprehensive budget that outlines your income, expenses, and savings. Monitor your spending patterns and identify areas where you can cut costs. Focus on debt management. Prioritize paying off high-interest debts first while making minimum payments on other debts. This can help you save money on interest payments over time. Cultivate a savings habit. Commit to saving a portion of your income regularly. Start with a small amount if necessary and gradually increase your savings rate as your financial situation improves. Invest wisely. Educate yourself about different investment options and choose those that align with your risk tolerance and financial goals. Diversify your investment portfolio to spread risk. Continuous learning and skill development. Invest in your education and skills to enhance your earning potential. Consider taking courses or certifications that can lead to career advancement or higher-paying job opportunities. Think long-term. Building wealth is a gradual process that requires patience and consistency. Avoid get-rich-quick schemes and focus on sustainable financial growth over the long term. Monitor your progress regularly. Track your financial progress to ensure you're on the right path. Review your goals and adjust your strategies if necessary to stay on course. Seek professional advice. Consider consulting with a financial advisor to get personalized guidance on wealth-building strategies and investment opportunities. By following these steps and maintaining a disciplined approach, you can gradually build wealth from scratch and work towards achieving your financial goals. Don't forget to like, subscribe, and share. Setting clear financial goals is essential for creating a roadmap to your financial success. Here's a step-by-step guide on how to set effective financial goals. Assess your current financial situation. Start by evaluating your current financial status, including your income, expenses, assets, and debts. Understanding where you stand financially will help you set realistic and achievable goals. Define short-term and long-term goals. Categorize your goals into short-term, 1-3 years, medium-term, 3-5 years, and long-term, 5+ years, objectives. This will help you prioritize your goals based on their timeline and importance. Make your goals specific and measurable. Clearly define what you want to achieve. For example, instead of setting a vague goal like, save more money, set a specific goal such as, save $5,000 for a down payment on a house within 2 years. Set realistic and attainable goals. Ensure that your goals are achievable based on your current financial situation and resources. Unrealistic goals can lead to frustration and demotivation. Attach a time frame to each goal. Establish a specific timeline for achieving each goal. Setting deadlines will help you stay focused and motivated to work consistently towards your objectives. Prioritize your goals. Determine which goals are most important to you and prioritize them accordingly. Focus on goals that align with your values and contribute to your overall financial well-being. Break down large goals into smaller milestones. Divide big, long-term goals into smaller, manageable milestones. This will make your goals more digestible and achievable, allowing you to track your progress along the way. Monitor and review your goals regularly. Continuously monitor your progress and reassess your goals periodically. Adjust your goals as needed to accommodate any changes in your financial situation or priorities. Stay accountable and committed. Hold yourself accountable for achieving your financial goals. Maintain the discipline to stick to your financial plan and make the necessary adjustments to ensure your success. By following these steps, you can create a well-defined and effective financial goal-setting strategy that will help you stay focused and motivated on your path to financial success. Building wealth from scratch requires discipline, patience, and a well-thought-out financial strategy. Set clear financial goals. Define specific and realistic financial goals, both short-term and long-term. Having clear objectives will guide your wealth-building journey and help you stay focused. Create a budget and stick to it. Establish a budget that outlines your income, expenses, and savings goals. Monitor your spending habits and find ways to cut unnecessary costs to increase your savings rate. Pay off high-interest debts. Prioritize paying off high-interest debts such as credit card debt and personal loans. Clearing these debts will free up funds that can be redirected towards investments and savings. Save and invest wisely. Develop a habit of saving a portion of your income regularly. Look for investment opportunities that align with your risk tolerance and financial goals, such as stocks, bonds, mutual funds, and real estate. Consider consulting a financial advisor to create a diversified investment portfolio. Continue learning and growing. Invest in your education and skill development to enhance your earning potential. Consider acquiring new skills or certifications that can lead to better career opportunities and higher income. Embrace long-term thinking. Building wealth is a gradual process that requires patience and a long-term perspective. Investing in precious metals, such as gold, silver, platinum, and palladium, is a popular option for investors looking to diversify their portfolios and protect their wealth. Here are some key points to consider when investing in precious metals. Portfolio diversification. Precious metals are often considered a safe haven investment and a hedge against economic uncertainty. They have historically exhibited low or negative correlations with other asset classes, such as stocks and bonds. Adding precious metals to a diversified portfolio can help reduce overall risk and potentially offset losses during market downturns. Store of value. Precious metals have been recognized as a store of value for centuries. They are tangible assets with inherent worth, and their value is not directly tied to any particular currency. In times of inflation or currency devaluation, precious metals can retain their value and provide a form of protection against purchasing power erosion. Supply and demand dynamics. The supply and demand dynamics of precious metals can impact their prices. Factors such as mining production, central bank reserves, industrial demand, and investor sentiment can influence the availability and price of these metals. It's important to monitor these factors to make informed investment decisions. Different investment vehicles. There are various ways to invest in precious metals, including physical ownership, ETFs, exchange-traded funds, mining stocks, futures contracts, and options. Physical ownership involves buying and holding physical bullion or coins, while ETFs allow investors to gain exposure to the price movements of precious metals without directly owning them. Mining stocks provide indirect exposure to precious metals through shares of mining companies, which can be influenced by factors beyond metal prices. Risks and considerations. Like any investment, investing in precious metals carries risks. Precious metal prices can be volatile, and market fluctuations can impact their value. Additionally, storage and insurance costs should be considered for physical ownership. It's essential to conduct thorough research, set realistic investment goals, and understand the risks associated with investing in precious metals. Market timing. Precious metals, like other commodities, can experience cyclical price movements. Attempting to time the market and predict short-term price fluctuations can be challenging. Long-term investors in precious metals often focus on the fundamental factors driving demand and supply rather than short-term price movements. How to invest in gold, silver, and other precious metals. Investing in gold, silver, and other precious metals can be done through various methods. Here are some common ways to invest in these metals. Physical ownership. This involves buying and holding physical gold, silver, or other precious metals in the form of bullion bars, coins, or jewelry. You can purchase them from reputable dealers or even directly from government mints. Physical ownership provides you with tangible assets that you can store securely. However, consider the costs of storage, insurance, and potential liquidity issues when opting for physical ownership. Exchange-traded funds, ETFs. Precious metal ETFs are investment funds listed on stock exchanges that aim to track the price movements of specific metals. These ETFs hold physical bullion or use derivative contracts to replicate the metal's performance. Investing in ETFs provides an opportunity to gain exposure to precious metals without the need for physical ownership. It offers liquidity and convenience, as the ETF shares can be easily bought and sold on the stock market. Mining stocks. Another way to invest in precious metals is through mining company stocks. By purchasing shares of mining companies, you gain exposure to the potential profits and risks associated with their operations. Mining stocks can provide leverage to the price movements of metals, but they are also influenced by factors beyond metal prices, such as production costs, management effectiveness, and geopolitical risks. Futures and options. Sophisticated investors can engage in futures and options contracts on precious metals. These derivative instruments allow investors to speculate on the future price of metals without owning the physical assets. However, futures and options trading can be complex and involve higher risks, so it is advisable for inexperienced investors to thoroughly understand these instruments before engaging in such trading. Precious metals IRAs. Some companies offer individual retirement accounts, IRAs, specifically for precious metals. With a precious metals IRA, you can allocate a portion of your retirement savings to physical gold, silver, or other metals that are held in a custodial account. Precious metals IRAs provide potential tax advantages and a long-term investment option for those seeking to include precious metals in their retirement portfolios. Before investing in precious metals, it is essential to conduct thorough research, understand the risks involved, and consider your investment goals, time horizon, and risk tolerance. Consulting with a financial advisor who specializes in precious metals can provide valuable guidance based on your specific circumstances. Additionally, keep yourself updated on market trends, supply and demand dynamics, and geopolitical factors that may affect precious metal prices. It's recommended to consult with a financial advisor or do your own research before making any investment decisions. Each investor's financial situation and risk tolerance may vary, so it's important to align your investment strategy with your specific goals and circumstances. Thanks for watching. Like, subscribe and share.